But if I hold MSTR, my one share of Bitcoin might have started out at, 0.001 Bitcoin equivalent, and now it's 0.0018 equivalent. And the idea here is that the shares of MSTR are actually accreting more Bitcoin per share over time. And if what strategy and most Bitcoiners believe is that, you know, companies will be valued to some degree on Bitcoin per share, or that it is a kind of a new modern metric of something similar to net income per share, that is a really great way to get Bitcoin exposure and what strategy would call levered Bitcoin exposure if you're comfortable taking the custody risk that MSTR is actually holding the Bitcoin, and you're comfortable with the operational risk, which the proof of STRC's scale and attention and ability to remain near par during this bear market, I think has actually shown that there's very little operational risk to strategy's current strategy.
I love the strategy, current strategy. Um, I just showed you this. I think I put it in there. I found this illustration so helpful to understand what strategy actually is doing because for me, I like charts that are simple and explain a thing very easily. And so, as I understand it, we have Bitcoin, which Saylor calls digital capital, and he expects Bitcoin to have around 30% AR over the next, I think, 20 years was his time frame. And so, if he can give people a digital bank account, which is digital credit, that pays people around 11 point, I think 5 is now. I think they turned it up 25 basis points to 11.5. There's a little bit of older screenshot. And they give people this 11.5% yield and keep the equity at par around like I think 5 or 4% volatility or whatever they have. I think also he posted today that the Sharpe ratio of stretch is today over 3, which is a really, really interesting thing. We can get into that. And what I found now interesting is the excess return that you have from the digital capital to the digital credit, kind of the difference to that gets to be accretive to be in the digital equity, which then makes sense why digital equity will outperform the digital capital because you have a positive Bitcoin yield. And so many people argue like, oh, it's like was it what's the word if the stock
Dilution.
delusion, yes. I wanted to say delusional. It it gets diluted, the stock gets diluted, but it cannot be diluted if you increase Bitcoin per share. So like per share, you get more and more Bitcoin. And so this means basically the Bitcoin yield. So if the Bitcoin yield is going up over time, you have to have you can't do it in a dilutive way. And so this chart really made it like click for me when I researched and watched their earnings call of like, oh, okay. So they use that digital capital. They give people what they really want. People don't want like 50% crashes. They want a bank account that just pays them 11%. And they get the 20% difference between the 30% and the 11% and put that directly into equity. And every time the stretch is kind of like on a high volume and they kind of can pay and they can get Bitcoin from that, they can put the ATM on. And we can also later see the SDRC live website, which I found very entertaining and interesting to watch. Then they can buy Bitcoin with that, and additionally have some equity raising also in MSTR. I think there's like some 30% rule with like one stretch, like they have to issue also something on the strategy side. I just want to throw that in. That like I found it really fascinating. This chart,
Yeah,
the strategy working.
yeah. Leave that up for one sec. So, what's a way to look at this is the gap between the digital credit and the digital capital moves up and becomes the gap between the digital capital and the digital equity, right? Whatever
Mhm.
that difference is it moves upstream into the digital equity. So you can imagine here, let's say, let me give you kind of a bullish scenario. Let's say interest rates start to drop and the digital credit STRC has a greater and greater track record. Strategy gets included in the S&P 500. Their credit product gets rated, and basically the market starts to look at STRC as a de-risked version of its current instrument. You can imagine that if rates drop significantly, then there's going to be enough demand for STRC, especially as AI is destroying white collar jobs. And these folks who perhaps don't believe that they're going to be able to find jobs or get the same pay that they did over the last decade, they're going to be looking at fixed income. You've got a boomer generation retiring, and they're going to be looking at the best fixed income product that they can get. And then you even have corporations who are going through, this really turbulent period where their business models are being disrupted every week by a new Claude AI release, and they're going to want some kind of fixed income or reliable, resilient cash flow on their balance sheet to make sure that they can continue to fund operations. I think there's a massive uh, waking up that any fixed income investor is going to look at something like STRC, this 5-to-1 collateralized instrument that with a growing track record and even a track record now in a bear market. And if interest rates fall, you can imagine that STRC could have an equal amount or continue to scale demand at something like an 8.5% yield in a couple of years. And if you imagine that interest rates falling and AI, uh, creates deflation, and then governments have to print money to keep the deflation from disrupting our levered fiat-based debt spiral, then you can imagine asset prices soaring, which would be captured by the digital capital, Bitcoin. And so you can imagine already where the digital credit gap between the digital capital gap increases because digital capital is going up at a higher ARR than 30%, and the digital credit can be issued at a lower yield of, say, 8.5%. Now that means you've taken that larger gap and you can extend it into the gap between the digital capital and the digital equity. And so you could see a world where digital capital is performing at 50% ARR. Um, and that gap has increased to the point where now the digital equity is doing something like a 75% ARR. And I actually think that that's where we're going. And this is all made stronger in a bull market. So the fact that we're seeing these massive STRC digital credit issuances and capital raises in a bear market downturn with STRC still sitting at around $100 par, it is incredibly bullish for the business model when we enter back into a bull market and the MNAV of MSTR expands to the point where they can issue MSTR at more accretive levels because they still always have that lever. Now they just have two levers to create the accretion to the underlying shares.
What is actually how do you look at like how much strategy could potentially outperform Bitcoin? If you see now this chart is like not quite a 2x, but whenever I look at strategy, whenever I look at Bitcoin, it's like usually the like rule of thumb like a 2x of Bitcoin. Is that kind of like a rule of thumb that you're looking towards if strategy continues to execute, Bitcoin continues to work, and everything is like continuing as it is? Obviously, with every stock, there are risk factors, but if everything goes according to plan and is executed well, that around the 2x multiple of what Bitcoin will produce, strategy might absorb.
I think 2x is conservative because there's still so much confusion around what strategy is doing. I mean, you yourself have been deep into Bitcoin, and it's only recently that you decided it was worth the time to set aside and go down the strategy and STRC rabbit hole. And there's just so much capital that still thinks that this is a Ponzi scheme, that Saylor's going to get liquidated. They just really have not taken the time to understand the mechanics at play here. So I believe that the more long-term MNAV for strategy is going to be around 2 to 3. That means that they're going to be able to make this model an even faster accretion mechanism. And so I think it's fair to expect a double in performance for MSTR shares over Bitcoin over a long time horizon. Because again, when you have a drop or a pullback like this, it is levered Bitcoin. So you're going to get a bigger downturn. But then once you enter the inevitable bull market scenario again, then I believe you're going to see outperformance above 2x to the upside. And we've talked about this. I mean, if Strategy owns the most Bitcoin and they are quickly becoming the primary mechanism where all other capital pools that can't take direct Bitcoin exposure are getting their Bitcoin return, Bitcoin fueled returns from, because they have the biggest collateral base and track record. And, once their S&P 500 included and they have credit rating, I mean, all of that suggests that Strategy is going to be the dominant winner in the Bitcoin space, and the floor price of MSTR shares is always going to grow at around or at least Bitcoin's CAGR. So if you believe a 30% Bitcoin CAGR, then you're saying, okay, MSTR, as long as they're not doing dilutive transactions, we're going to grow MSTR at least 30%. So any company that has that level of growth, especially when every major tech stock is being disrupted by AI right now, I think you're going to have traditional equity investors wanting the exposure through MSTR. You're going to want the fixed income market wanting exposure through STRC. And in general, we're going to see, looking back 10 years from now, that this bear market solidified the success of the strategy.
I have another chart for you, and I found this is almost like I think they're conservative with those numbers here, but I'm curious what you think. That's one snippet of I think the last to last earnings call they did, and I think from Leo talked about what kind of situations they could see in when they do the digital credit sales, the dividend rate, and all of those things, how the annual BTC yield will grow. And obviously, if you already have 738,000 Bitcoin and 3.5% of the supply, it gets harder and harder to produce a very big BTC yield. It's easier for smaller treasury companies to have like a 20-30% Bitcoin yield if you start with like 5 Bitcoin. But like 14% Bitcoin yield, is that I see it as conservative, but like, do you also see it as like conservative, especially the way Stretch is currently kind of going? And this is kind of like, if all those things accumulate, that this is kind of like very conservative.
They've been pretty accurate with their forecasting, especially around Bitcoin yield. So I guess I'll just kind of assume that this is a fairly accurate. I don't have a reason to believe otherwise. Yes, there is kind of the law of large numbers at play here, but one thing that is definitely not included in these projections is the idea that Bitcoin might actually be able to have a yield of its own. So, for example, all of the Bitcoin yield that we're talking about here, and all of the net income from Strategy is basically now on the basis of Bitcoin's appreciation and their ability to issue these instruments at an accretive Bitcoin per share. But you could imagine that perhaps Bitcoin becomes so foundational to the banking system or modern money that you can have Strategy lending it out to JP Morgan and they earn a 3% yield on their actual Bitcoin for lending it out. Now you have this incredibly large stack of Bitcoin that not only is the operating company creating Bitcoin yield, but the Bitcoin that they're sitting on itself could potentially have a yield. A 3% yield on a company sitting on $100 billion in Bitcoin, these start to be really significant figures. And of course, the idea would be that they would turn around and take that yield and buy more Bitcoin, which would be even more accretive to MSTR shareholders, which further improves their collateral base, which further allows them to issue more credit. So there's just so many flywheels here, and it's such a robust model that self-corrects. Um, I just I think that this is clearly the most overlooked opportunity in finance today.
If you live in Europe like I do and want to buy Bitcoin the right way, check out Relay. Relay is a Bitcoin only platform with no distractions, no shitcoins, just a BTC. It's also the easiest way I've found to do what actually works, buying Bitcoin on a consistent basis. Relay is also self-custodial. They never have the keys to your Bitcoin. No freezing of your assets, no counterparty risk, no rug pulling whatsoever. I have been a long-term fan of Relay, not only because it's incredible, easy to use and very beginner friendly, but also because it just works. If you want to get started with Relay today, click the link down in the pinned comment or in the description. And once you have downloaded the app, type in Robin in the referral code section of the app to save 10% on fees. So set up your DCA Bitcoin plan today with the Relay app and get cheaper Bitcoin if you use code Robin. I want to tell you about something very special to me. It's called MicroStrategy. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With MicroStrategy, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer, all 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because MicroStrategy is not selling the washer. MicroStrategy is selling the device that stamps the washer. You get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microstrategy.io. Finally, we have BTC Prague back in 2026, and this year I'm not only speaking on a panel, but I'm actually going to present an interesting new angle, a perspective, a Bitcoin thesis at BTC Prague this year for the first time ever. I've never done that on any other conference, so this will be a fun one. If you listen to this show on a regular basis, I would love to meet you in Prague this year. It's very high signal, no noise, and Prague is just a freaking amazing city with awesome drinks and a lot of good food. Use code Robin to get 10% off, and if you buy with Bitcoin, you get an additional 5% off your ticket price. I'll see you there in Prague. Make sure to come say hi. Yeah, I think so too. I just wanted to bring that chart up for people to have an overview of like how the Bitcoin yield has performed in the past. So we see they have grown the Bitcoin yield in 2025, 22%, in 2024, 74%, which is crazy. And then, yeah, obviously, like 2022 was just 1.8%, which I think mentioned in the start, which was the massive downturn where like they have had a hard time issuing shares and like being in the market, and they were like cautious also, and so it was like not easy for them to raise raise more Bitcoin. And now we're seeing the same thing again. Like the Bitcoin market is similar, not as bad as 2022. Like in 2022, it was a little bit of a harsher crash than it is right now. But we're seeing a similar situation, and they're just like, at it. They're like already have a Bitcoin yield of I think 1.2 or 1.5%, something like that, and it's just like a little bit of the year, and they're already accumulating very good. So I think I feel like they could crush it with the Bitcoin here. But I don't know, like they could really make an dent here in their own forecasts. Just a feeling that I have.
Yeah, well, one thing that's interesting is you can actually play out a scenario where Bitcoin yield stays completely flat over the next decade, right? And what's interesting is that And it's crazy to even say this out loud, but we're seeing it now in the market with these latest combinations of MSTR and STRC buys where they're literally on track over the last 2 weeks to buy 1.86 million Bitcoin per year. That's their pace over the last 2 weeks. This is a finite supply asset that, there's theoretically going to be 21 million. And yes, we're already at the point where there will be less than a million issued over the next 100 plus years, but there's not that much Bitcoin in the market to absorb when they go into the market at this pace. And Saylor said it himself, we can buy Bitcoin faster than they can sell it. And they literally are at that point now. They literally are buying more Bitcoin than the new issuance of supply coming online every day, every week. And so you can imagine a scenario where Bitcoin yield stops. It's totally flat, but the buying power of MSTR and STRC in the market as fixed income wakes up to these vehicles is pushing the scarcity of Bitcoin up so much and the price of Bitcoin up so much that your MSTR shares are skyrocketing just because the Bitcoin value of the current Bitcoin per share is increasing in value. So I literally think that strategy is turning a corner now to the point where they can single-handedly push Bitcoin's price up and will continue to do so at scale. And so you don't need Bitcoin yield as long as there's a buyer in the market that is going to push Bitcoin's price up forever.
Yeah, especially I think Stretch is a product that will appeal to a lot of people outside of Bitcoin. I think it will take some time for it to be credited, to for it to have like a 1, 2, 3 year track record. And I think I talked yesterday with Dan Hillary from like the True North podcast, and he said there are some big money pools that can only invest in an instrument if it's like 3 years
Yeah.
or longer, or 4 years or longer in the market. And so I think the real power of Stretch we're not even seeing yet. I think the real volume, like we in the like if you want to say it, you could say like Stretch is still in its rookie year. Right? It's still like a year, the year zero for Stretch, which is kind of crazy to think about.
Yeah, no, it's absolutely right. A lot of capital pools can't even consider, they can't even look at an instrument unless it has at least a 3-year track record. And so the majority of capital is, they might secretly be looking at this and waiting to get interested, but really in reality, their boards, their compliance teams can't even start examining and researching the opportunity until there's a 3-year track record, and we're only at about 8 months. But what's really great about this bear market is that they're showing their track record even with massive downward Bitcoin volatility, essentially dispelling once and for all of these myths that they're going to get liquidated.
I want to show you I mean, you 100% know about that website, but I want to show you the viewers this website, this SDSC.live. I want to also ask you about actually competition to Stretch, because there is competition with like I think Strive has the SATA thing out, and I think in Japan, Meta Planet also has a similar product out. I
Ours,
Yeah, I was like, to be completely fair, I've only researched strategy so far, and I'm not even 100% done yet. So I haven't looked in any other treasury companies yet. But it just looks so interesting because for me, it seems like the preferred stock and all of those things, it's a winner takes most in the jurisdictions they are in. So wherever Stretch is available, they will cover most of that market, because they will be the issuer where where they have the most Bitcoin. They will be the issuer where there's the most credited, like most TradFi stamped of approved player. And we kind of see it already now, where Stretch is kind of pumping the ATM, where at SATA, the ATM is paused, and the volume and the price, like even though the yield is better on SATA, the Stretch ATM is just like blowing out of water. And it's like you see it online, and I only see Stretch. I had to dig in a little bit deeper to even be aware there is already competition in the market. How do you view competition now from Bitcoin treasury companies and maybe potentially even from traditional banks that look at strategy and they're like, oh yeah, we can do that. Like that seems like printing money. We are good in that.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called MicroStrategy. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With MicroStrategy, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because MicroStrategy is not selling the washer. MicroStrategy is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microstrategy.io.